try to talk slower because I just realized I talk really fast because I understand this. So I'm gonna talk really slow when I say this. Um, One entry variation you could have had is just based off the 1 hour, anticipating that price is going to close below this bullish candle. And if this price does close below it, you have the idea that price is bearish and it's solidified that it's bearish and that we're going to continue on lower. But due to the fact that your stop placement could be a bit bigger, if you want to have a very safe stop, it could be at the swing high. It can also be at the closing candle high, body high, or wick high, right? You would have a bigger stop. If you're okay with that, you can immediately just take this, be fine with it, know that you'll have somewhat good RR. If you want to minimize that, you would go down another time frame to get a little bit more information. We go on a 30-minute time frame. The 1 hour opposing candle also aligns with a 30-minute, as you saw on some other example this week. This is good. So before that even occurs, we do have a bullish fair value gap here on the 30-minute. This is very, very important. You'll see this quite often. Don't get me wrong, the 1 hour is great, but the 1 hour did tell you that there was a bullish fair value gap here. The 30-minute did, which is why it's an essential time frame that we use. Because that 30-minute bullish fair value gap got what closed below right here clearly on the 930 candle, you can anticipate that price is going to then go for this opposing candle. And if we are to be bullish, this would not happen. So you can immediately place a position at the bottom quadrant of this bullish 30-minute fair value gap, and immediately your stop placement could either it could really be as slim as the high of the 30-minute bullish fair value gap, or a little bit higher. But realistically speaking, price is not going to spike up and just take you out here because again, price is not going to use this 30-minute bullish fair value gap as support anymore, meaning we have inversed it and we will continue the downside further on. So that's the reasoning for this entry. Are there other entries? Yes, there are other entries. So on the 30-minute, we keep displacing. So after this, we create a bullish fair value gap here or a bearish fair value gap here. We tap into it. Validation of a bearish fair value gap is when a swing high forms. Are you going to wait for that? Sure, you can. Or you can see that we have an opposing candle here, and you can immediately say, well, my entry will most likely be at this opposing candle here. My stop can be at the bullish candle body high or the bullish candle wick high, which is not that much of a difference, right? And I can continue on targeting price lower. Do we have any other entries? Yes, we do. We have, again, another 30-minute opposing candle here. So how would your stop look like again? It can either be at the body, or it can be at the body high right here, right? Or the actual high, which is quite a big stop, or 50% of that wick high, which is still big to me. I'd rather take the body, right? Um, that's still 1 to 4, right? But that's again, if you missed all of this, these are just re-entries utilizing what we know that you could have taken. All are based on the same metrics. Could you have gotten an even smaller stop? Of course, sure, you could. I could show you all types of things, but this, I just want you to get this solidified in your mind when you're seeing price move, how we decide stop placement, where our entries would always be, and just that overall pattern over and over and over again. It's going to repeat. So, yeah, and I'm pretty sure on this day, again, price did not displace at all. So, again, the only saving grace for you is the 30-minute opposing candles to tell you that price is continuously still bearish. Again, I'm very, very happy that a lot of you did catch on to this. Some of you did struggle in this past week. So I really, really hope this explanation does help you. Um, so this was Wednesday.
Moon, just before we go into Tuesday, I have a few questions for Wednesday specifically.
Yeah.
Um, if we can go back up and mark it from the 4 hours, I noticed there's a 4 hour SIBI. Um, could that help influence our decision making or not?
Well, relative to where price is at, right? So we'll mostly be looking at price when it's at this high here. It doesn't really mean anything for us right now at all. The only thing I could possibly think that that 4 hour CB could mean is if you said you were bullish and that because price has displaced above it, that is going to be used as support. But besides that, it doesn't really mean anything to us right now. I mean, this swing high, if it was taken, that would have meant something to us, but there's not really much we can do here with it unless if we are bullish biased and you're anticipating that price is going to use that bearish FVG as support. So yeah.
Right. Another entry that I'm seeing on this 4 hour, I'm seeing a 4 hour opposing candle, which we managed to close through in the 10 a.m., excuse me, in the 6 a.m. 4 hour candle. So that's an entry that I'm seeing. And if I was to take it, I'd be placing the stop loss at the body of that opposing candle on the 4 hours.
Yeah, so your entry would have looked something like this. Yeah.
Right. But at the same time, I would be unsure where to target because of the 4 hour BISIs that we have from the 20th.
So again, um, this is where again I start to teach about the statistical based targets. So when I measure from this high, that's severe manipulation. Usually, I think on this day, targets were, if I'm not mistaken, like 0.9% or 0.89 was like a minimum. And then somewhere in the middle was like 1.2%, something of that nature, 1.2% right here as a middle target. And our extreme was like 1.7 something. So your targets would have either been here, and if you see a reason to cut, if you see a reason to end the trade here, like an opposing candle being about to be displaced above, etc., then you cut the trade. If you don't, then you can anticipate that price is going to go to your middle uh, statistical based target, which would be 1.2%. And you would have your trade up here. And that's really it. I mean, if you wanted to target
Right.
max extension, well, then you have to worry about time. And when you start to look at time, you're like, oh, this is already about to be 2 p.m. It's not looking really too good for us. Why is it not looking too good? 2 p.m. candle starts here on the 4 hour time frame. We've already displaced, pretty deeply. We've already formed a swing low. Let's just cut the trade here at a 1.2% target, and that's it. So that's where it gets to like our actual data, our data analytics really help with that. So for you, even though since you're new, you wouldn't really know about that yet, but that's really what gives us our main edge when it comes to taking TPs and taking profits at really, really specified points. Um, and you can kind of ignore a lot of this that you see on your left, if that makes sense.
Yeah, gotcha. On the 30 minutes, I'd be struggling to take an entry, and on the 1 hour, because we can see the 9 a.m. candle and the 9:30 candle, we failed to close below the opposing candle.
This one right here.
So, and yeah, I understand we take it during the 10 a.m. candle, but
Mhm.
whilst the candle is sprinting, um, I can anticipate just as it's sprinting, I'd be unable to tell which direction it would be going because I'd be unsure if that 9:30 would have created the swing low, or if it would be the swing high.
This is when we start to use a lot of supporting based arguments here. So our first supporting based argument is we've created a swing high in the 4 hour. That's not good enough for us yet. We need to take out this 2 a.m. low to solidify that we are possibly bearish. So let's take a look here. And then we also want to see this 4 hour opposing candle be displaced below to really, really solidify that we're bearish. Now, let's go down the 1 hour time frame and see, and relative to the 1 hour, what are we seeing? Well, before market even opens at 7 a.m., we've already taken out that previous 4 hour low, right? We've already basically closed below this 4 hour opposing candle you're seeing on the 1 hour. So you're already basically already bearish. Like before market even opens, you're already bearish. The main thing you're trying to see is again further and further support. Um, the next support would be the swing high formation here on the 1 hour alongside your opposing candle here on the 1 hour being closed below. But again, is it really as convincing as the 4 hour? No. The 4 hour already is telling you what price wants to do. We're just wanting to see a little bit more based on the 1 hour, but we're not really too like it's not something that you hold over what you already just saw on a much higher time frame. You already saw in the 4 hour time frame that we're basically already bearish, um, which means we can be a little bit more aggressive when it comes to our entries because we already have a very solidified bias, like before market even open, right? So that's one thing. And then another thing too is when we go down a 30-minute time frame, another supporting factor is when we are bullish, you'll see that price will respect bullish PD arrays, right? And opposing candles, right? So this opposing candle right here that you see, these three on the 30-minute time frame, they, if we are bullish, they should act as support, correct? Right? Like, do you see it?
Mm-hmm. Yeah.
They should act as support, but what are we seeing here? This is 9 a.m. They're not. Actually, price is closing below them. That's one cue. The next cue is this 30-minute bullish fair value gap that was created. If we are bullish, price cannot close below it. It must respect it and must displace away. Do we see that price closes below it?
Mm-hmm.
Now, your next thing, another supporting argument is you want price to close below this opposing candle that you were talking about here, correct?
Yeah.
But you already have a lot of arguments from not only the 4 hour already, the 1 hour, and then lastly the 30-minute. This closure, it's one thing to, be a little bit concerned because yes, it did close below the opposing candle, but you already have at least two supporting arguments as to why we're bullish. And then the third and final strike would be the fact that we could not displace above these bearish candles and use them as support. That's not good. We're not going to see that during bullish price action. And then two, the fact that this bullish candle or bullish fair value gap could not act as support. And not only that, but we close below it. And not only that, this is right before 10 a.m. where we can anticipate that a swing high will form. Like this is not, I mean, you're already solidified in the fact that we are bearish. So um the immediate moment this happens here, this closure happens here, you kind of have to immediately pivot to bearishness. There's nothing else that you can really utilize except, yeah, the fact that we did close below this 30-minute opposing candle. But at the same time, we still have another 30 minutes before price closes, right? This isn't the 9:30 candle. So 9:30 to 10 a.m. Well, right around here, we're already bearish here, 6 a.m. to 10 a.m. So we can anticipate that price is just going to expand. There's just way too many supporting arguments as to why we would not be bearish. And again, this closure was not pretty. I understand it. We don't want to see that, but because of all the other supporting arguments, you can't really be bullish. Like it's not, it doesn't really make any sense. Structurally, it doesn't make sense um, at all. And with everything that we know, it doesn't really make sense either in terms of displacement and things of that nature. So,
Yeah, I understand the bias direction behind it, but It's just to maximize the RR. So if I was to take the entries discussed in the 4 hours, that's what it would look like. But on the 15 minutes, um, if we go down, the entry could have presented itself at 9:30
Mm.
upon, as we see the candle closing or displacing through these opposing candles. I'd put the stop loss at the 15-minute opposing candle body or that swing point. Doesn't really matter. But again, that candle at 9:30 would shake out a lot of traders per se. So it's only at that 9:45 after we close through it that would also be my validation entry. I understand the higher time frame bias, but as it takes more time to form, I'm looking for more confirmations on the lower time frames as well.
So I'm pretty sure you heard a lot of my members say this, and it's kind of hard to kind of believe it, but a lot of us don't, will rarely even look at the 15-minute time frame or lower than that. Most of the time, we're going to be in the hourly and the 30-minute, looking for all these clues that we look for. It doesn't require more patience, sure, but when you're seeing these smaller stop losses and that's what you're trying to wrap your head around, that's the reasoning why, because we're not really as shaken about off seeing these types of closures here. We're more kind of worried about, all right, what is our 1 hour saying? What is our 4 hour saying? And really, for me, everything was really based off the 30-minute that day. There was no need for me to be even on a lower time frame because I can anticipate that an entry will be presented here. Unless if I'm missing the whole entire move, I mean, there was no reason to be on the 15-minute time frame. So all we are really looking at is, all right, cool, this opposing candle here. But most importantly, before this opposing candle, this 30-minute bullish fair value gap here. Like this was really, really the culprit that we were really wanting to see. If we are bullish, it needs it's not a if, it needs to hold. I cannot, I cannot be bullish here. So this is the reason why you see this entry here before the opposing candle, and then why you can see that a stop could be this damn small, right? Or this damn small, because I know that lower time frame traders are being shaken down even on the 15-minute time frame, but just this small little bullish fair value gap that you see here was more than enough to tell me everything I needed to know on top of what the high time frame bias already told me. That's the reasoning as to why the stop loss can be a lot smaller. Another thing too, I've already pretty much said this about defining ranges, but I'll explain it again. So let's look over here. We have a swing low here. Wait, let me see if I have a smaller marker here. Actually, I'll just use a box. We have a swing low here. We have a swing high here. We have a lower low here. Oh, shoot. Let's see. Which is a swing low here, a lower low here. We can anticipate that this is our lower high here. Now, we'll need to be making a lower low. And then after we make a lower low, we'll most likely see a retracement. Well, if we draw this out, lower low, lower high, there's no reason for price to at least here make a deep retracement above and all this stuff here. So my entry and my stop loss placement, even though it is based on 30-minute time frame, it's not like on a 1 minute or something to get a tighter stop. This tells me all I need to know because I am entering at a formation of a high, and we have no structural low for price to use as a range to rebalance. So another way price could have looked is maybe this candle here, 1, 2, 3, formed a swing low, and then we would have measured that high to whatever swing low formed here and said, oh, okay, well, price can maybe retrace up to 0.5 or 0.6 or even 0.79. And that's how far price can go up. And I'll have to make sure my stop loss placement can accommodate that. But we don't have that. So I can anticipate that this stop loss, however small it may be, it will not be retraced into. The candle's just going to open, create that wick. How long is that wick? How long is that wick going to be? We don't really know, right? but all we can use is a supporting factor that we've already displaced below this, and this is a bullish array. So when price displays below something that was a bullish array, it's going to use it as support. So I can anticipate that this is really going to be our factor in terms of stop loss placement. I don't need to really go below or beyond that, such as a swing high or anything else. So algorithmically speaking, that's the reasoning for such a smaller stop. Now, there's no problem with having a bigger stop because yes, all these trades are still hitting a 1 to 5, 1 to 7, 1 to 8, whatever. But I'm explaining the reasoning for these much smaller stops that you'll see me or some of the other experienced traders have. The other thing too is you can start off with a very, very, let's just say, moderately big stop. There's nothing wrong with that. Like intrinsically speaking, there's nothing wrong with you just saying, I'm just going to place a stop here. I'm just going to place the high of the stop here and target whatever I was going to target anyways. Yeah, it's still 1 to 5. But when you see price close right here, let's say you're in the trade and you have this nice stop, you're not worried about anything. You see price starting to really close below this opposing candle here. Add more into the position, right? Now you can start to move your stop to where? You can stop your move to stop your stop to this um, bullish fair value gap, and you can say, now I can have a tighter stop. I took the safer entry at first initially because I just want to make sure I'm following this systematically. But now that I have the confirmation, now I can add more into the position. Now I can have a smaller stop, which what is that doing? You're adding more risk on the table, but you're also cutting it in half because what? You cut your stop in half immediately afterwards. So that's something I recommend you and pretty much a lot of newer students to do. Some of them are already doing it right now, which is helping them a lot in terms of confidence. Because, yeah, you can start with the most conservative, structurally sound stop that you know that's just a stop that's rarely ever going to get you stopped out. But immediately when you see major confluence and closure and everything of that nature, then you add more, and now you have more understanding of where your stop can move to next. In terms of visuals, it's going to look like you have a much tighter stop, right? But in terms of overall execution, mentally, you're going to feel better about it because it's not initially, you didn't really take that risk by having such a tight stop. You took the stop that we're all taught to take and whatever form may be. But once you start to see more and more confirmation, then you figure out where to move your stop based on all these things I'm showing you here. So hopefully that makes sense. I don't like how fast I speak because I get this stuff, but it's I'm trying to make it make sense as much as I can.
Yeah, gotcha. That makes sense. I watch you in 2 times speed, so you
yeah,
are speaking perfectly fine right now.
glad. I'm glad for you. It is good, good, good. Um, but that was really it. And um, not all weeks are gonna be as hard as this, I guess you could say, and they're not gonna be as easy as this in some ways as well. But I at least want you to kind of understand the thought processing, and I'm glad you understand the bias because that is really the most important one. If you're going to take a loss here, I'd at least want it to be a loss based on a sell and not a buy. Because to me, if you took a buy, it would just mean your risk to ruin would be much larger because price did not give you any, it did not give you anything here. I mean, some people they would have kept holding their stop, but you guys know better than that, and I'm happy that you do. Um, at least bias is one of the most important things I want to at least get solidified here. Um, okay, so I spent a lot of time on that. Let's go to Tuesday. Um, I'm not sure if Tuesday there was really much going on, but let's just look anyways. Um, so starting on the 4 hour time frame, again, we're trading most of the time the 6 a.m. to 10 a.m. candle or the 10 a.m. to 2 p.m. candle. So all we can see here is we have this large bullish fair value gap here on the 4 hour time frame. Um, you can see that for sure. If we are to be bullish, we want to see either 2 a.m., 6 a.m., and 10 a.m. form a swing low, which is conventionally what we'll see. Or we want to see 6 a.m., 10 a.m., 2 p.m. form a swing low, which is what you did see. So we can't really prepare for it to be we can't really base our trade just off that, but that's what we'll like to see while we're in the trade to confirm that we are truly bullish. Of course, at the end of the day, price didn't really expand much, so it didn't really matter either way. But let's go down a lower time frame here. Let's see. On the 1 hour time frame, we also did have a 1 hour bullish fair value gap. We had an array, a large array of them. But you could just focus, you literally could just focus on the one that price is in right now. I don't like my screen to be too messy and have this whole entire big stop. That's why you'll see like, yeah, we can have a large cluster of bullish or bearish for bad guys, but I'm really focused on where price is currently. I don't like the mess. That's just me. It's an OCD thing. Uh, yeah, but um, so ideally, you want to see price form a swing low either right here, 1, 2, 3, or again, 9 a.m., 10 a.m., and 11 a.m. forms a swing low to confirm further upside. Boom. Do we see any opposing candles to our left that we can use relative to where price is at? No, we don't. Not on the 1 hour time frame. We don't at all, so can't really use that. On the 30-minute time frame, do we see anything that we can use? No. All we can see here, and this is really, I think, was my reasoning for entering on that day, I remember specifically, was we took out a swing low. We're inside a bullish fair value gap. I'd like to see an early formation of a buy forming here with the formation of a swing low. Do we have an opposing candle? Yes, we have an opposing candle all the way up here. And this is when, this is when I get a little frustrated because I know some students are seeing this and are like, well, I'm just going to take this entry. My stop can be here. Um, we're going to expand all the way here. This is a random day. Like, this is a random non-news day. I don't really see a reason for price to expand very, very much. But at the same time, I'm also anticipating that some students are seeing this as that. Now, what have I said about stop loss placement, about ranges? Well, there's one thing that I can see here. We have a low, we have a high. This is a little weird of a range. We have a low, we have a high, we have a swing high here. I can anticipate that price will retrace afterwards. So why can I anticipate that price will retrace? I can anticipate that it will retrace because we already have a defined swing high, a defined swing low. So when I draw that out, looks like this. Did price retrace into it initially? No. Did price retrace into it after? Yes. But why would buys be invalid around here? This is really, really, really tough because if I were to trace out price, you'd see, let me see right here. High, low, higher low, higher high, lower low, higher low, higher high, lower low, lower high, lower low. This was also my reasoning for the afternoon sells that I took. Um, After we created this lower low, buys became invalid, not only because of the structure, but also because what? We have a 30-minute bullish candle acting as resistance. If this had it occurred and we only structurally changed or shifted, you could have given bulls more of a chance, but because we structurally shifted and had a 30-minute opposing candle resist price, you can't really be bullish around here. It's just not going to work out well for you. And then for me, how do you get the sniper entry here when price is deeply retracing? Well, we already have a defined range high, a defined range low. What classifies it as a defined range? Well, you have a 1, 2, 3 swing high, you have a 1, 2, 3 swing low. So I can measure it and just say to myself, well, when we tap the 0.62 or 0.79, we form a swing high inside of it somewhere. I can anticipate that price will go for this low. Structurally, that makes sense, right? So, what would your stop placement look like off the swing high? If you placed it at 50%, you would have been stopped out. If you placed it at the actual high itself, you would have been fine. So it looks like that. Sells here. Maybe once you see, I don't know, there's not really much room here to move, to do anything. It's the end of the day, but that would have been the entry for sells just based off that. The entry for buys, like I said, on the 30-minute, you saw the swing low formation here, a lack of displacement to the downside. You can immediately say, well, if this is to be the swing low, um, I'm just saying this is your entry because most people just take the immediate. Like, I would like you guys to be better in this, but most new students, my experienced students don't really do this at all, but most new students would immediately just say, okay, the thing candle already open. I'm just going to take this entry. Stop's going to be at the low or 50%. You would have got stopped out at 50%. Now, me and other students that have seen this time and time again understand that the candle doesn't really open without a wick. Like, you won't really see a bullish candle without a wick forming. So we can anticipate that the first 5 to 10 minutes at least are going to form that lower wick and will most likely enter as close as possible to where our stop loss would be, so we can have a much higher risk to reward and overall lower risk on the table. Because I can tell you this is the safer entry, but in reality, in my head, this is not the safer entry. Why is it not the safest entry? Because you're going to anticipate that price is going to respect this 50% stop. But in reality, you just get stopped out. Meanwhile, if you just maybe take the more extreme lower entry, your stop can be at the safest place possible, which would be that low, and you can still have a higher R net overall. So the safest entry to me is the lowest or highest entry based on if you know what you're looking for, right? We took out a swing low forms a lack of displacement thereof. There's nothing really here about this entry that is, I guess, too difficult. I guess the only thing would be 9:30 starts here, and you would anticipate that maybe 10 a.m. will form that swing low, and it does it. That's fine. But it happened. Maybe you took a loss there. But this lack of displacement here, you can anticipate at least 10:30 to form that swing low, and you take those buys upwards. Um, and how would your stop look if you took this opposing candle? Well, I kind of already showed you. If you took the body low, it would be right here. And this is the highest point that price went. If you took the wick low, it would be right here. Like, that's a huge stop. There's like, when you see something like that, don't just take it. I'd rather you just not take the trade if you see that your stop is going to be that big. Like, there, you know, or another thing I'd rather you do is, do you see, retracement or something that possible that you can take? Really, there was none. It would have been in this leg here if you had measured it, but of course we shifted struck. There's nothing here that you can really take besides the cells here in afternoon. This was a tricky day for most students. This was a tricky day for most people in general, but that was kind of the overall read of this piece of work here. Um, And Monday, you guys pretty much already knew what happened Monday. It was the whole AWS outage. So I could explain that to you. I did catch this trade as well. They did, I did have to like dispute about why I should get the profits kept in my account. It was some crazy stuff. But um, so here on the 4 hour time frame, again, we'll trade around the 6 a.m. to 10 a.m. candle to the 10 a.m. to 2 p.m. candle. So the only thing I see here is this opposing candle here. I could say that I want to see price utilize this 4 hour opposing candle as support. Is there anything else that we can really utilize? Well, we have a 4 hour bullish fair value gap here and here. Um, it's right around here to the left of that opposing candle. It does make sense. Do we have a bearish fair value gap too? Yeah, we do. Yes, we can say the bearish fair value gap. We displaced above it, supporting price. That's good. That's fine. You can draw that. I just, again, I don't like to have a huge amount of things on my chart, but you can draw that. That makes perfect sense. I understand why you would. Um, so, and then now you can say, well, what would I like to see price do based on the 1 hour and the 4 hour? Or the 4 hour, we already displaced above or closed above the 4 hour opposing candle and the 1 hour opposing candle here and the 1 hour opposing candle here. So we're clearly bullish. Like there's not really anything about it. We're clearly bullish. Um, we want to see price also close above the swing high, use it as support. Of course it does. Now for an actual entry, how would that look? Well, you guys pretty much saw this on Monday, but before the outage, this was literally my entry. 9 a.m. opposing candle, 9:30. My stops were because again, why would my stops be this small? Because that's the body. I can at least take the wick low, right? And you'll see this happen at times, and when it does, you just make a lot of money quick. Um, my stops will be at this low of the opposing candle, and it should not get disrespected. And my target was, if I'm not mistaken, my target was at least this swing high here. This swing high here. I'm pretty sure I didn't need to. I just targeted this. That was a 1 to 22, and I had to fight for my life to get them to keep the profits in my account. But that was really the main entry I saw based on the 30-minute. Was there entries on a lower time frame? I didn't even see that on the 15-minute. Yeah, I could probably show you some 5-minute stuff, but I don't encourage extreme low time frame trading. And plus, your platform would have been down, so you would have been able to take much anyways. There are some maybe further entries here off of opposing candles. But of course, there was an entry here off the 30-minute. But again, all your platforms were down. There wouldn't be much you would have been able to do, really. But that was the simplistic entry here. And then why do we not expect price to retrace deep? I already explained this, but high, low, lower high, lower low. Do we see a higher high yet? No. So you can take this leg and have a small stop, and it makes sense with the opposing candle. You've seen like 3 to 4 different examples just this week. So hopefully this was um, a great recap. I want to do this more often. You start to see and hear the same things over and over again, the same actions, the same reasonings, and hopefully it's gonna help. All right, that's all I got for you guys. I will post the recordings of both into a database on YouTube, a playlist for you guys that you can rewatch whenever you want, whenever you'd like. Um, that is all I got for you here. Let's see. You're welcome. It's no problem at all. It's no problem at all. No problem.